So let's rewind the clock and see Samvat 2075 what exactly managed to stay strong and look at some of the best mutual fund performers. The IIFL Focused Equity Fund has managed to clock in a gain of 32% in the last 1 year. So that's Samvat 2075. Interestingly, we see a lot of thematic funds as well. So there's the Tata Banking and Financial Services Fund as well as the BNP Paribas India Consumption Fund. And most of them seem to be small funds with the exception of the Kotak World Bank Fund. You have the Canara Robeco, again, Consumer Trends Fund. You have a DSP World Gold Fund, again, because of the way gold prices have ran up. You have the SBI Banking and Financial Services Fund. This is the only fund that does have a bigger mutual fund house, as well as the fact that it's not thematic, and this one's grown around 28%. But yeah, we just thought that we'll highlight which are the mutual funds that have actually done well in the last 1 year. That's basically Samvat 2075. Now let's take a look at the different asset classes, because it's not just mutual funds, it's also different asset classes. Gold and silver, definitely the star performers, 26% return. The Nifty, yes, we've had tough times in the equity markets. Yes, GDP may have grown only 5%, but with the exception of the last 2 months, the rest of the year was really great. So we had a Nifty return of 10%. We couldn't say the same for the mid and the small cap indices, where there's been a decline of 7% and 11%. So not exactly the best quarter for, not exactly the best year for the broader markets. And hence, for many of you, and we do get this query a lot from our viewers, that my small cap fund, which I invested in 2 years ago, or my mid cap fund, which I invested in 3 years ago, has not been doing well. Well, for the reason that you just saw on your screens earlier, that the mid and the small cap indices have declined, and how. But in the midst of all of that, it's the Axis Small Cap Fund that's really managed to outperform. So stock picking is really where the game is. Speaking of stocks, these are some of the best wealth creators. Bajaj Finance continuing its streak, and as is the case with the Bajaj Finserv and Asian Paints. Titan as well. It's become a 4-digit stock now, and it's certainly rallying. And how BPCL, that entire divestment buzz, has certainly kept the market interest very, very strong. But many of you may have been caught on the wrong side of the market as well with some of these stocks. The big loser is, of course, Yes Bank. From being a 200 rupee stock, it's now just a 50 rupee stock. It even touched its IPO price, in fact, in the last 2 odd months. IB Housing, the entire IB group, we know what's happened over there, as is the case with the Z Entertainment. Tata Steel as well, a big loser, as is a JSW Steel. More sectoral and industry issues surrounding these two. So there you have it. That's exactly what worked, what didn't work, in Samvat 2075. But, you have to look ahead. You may have seen losses, you may have seen gains, but at the end of the day, you have to ensure sustainability of your gains and elimination of your losses. And we at The Money Show are going to help you do just that. So let me bring on board personal finance expert Harsh Roongta. Mr. Roongta, thank you so much for joining us on The Money Show. Season's greetings, and we hope you have a very prosperous Samvat 2076 as well. So, Mr. Roongta, as we kickstart the new year, we do know that we've seen the last 1-2 odd years have been a bit tough. Many mutual funds have not exactly performed well, and mid-cap, small-cap funds as well have been beaten out of shape. People who've invested in the last 2 years, their NAV values have certainly dropped. So as we step into Samvat 2076, what would you recommend, investors should look forward to? How should they kickstart the new year?
So first of all, let me wish you and all viewers very healthy, fulfilling and a prosperous new year. Coming to investments, I think the themes remain the same. I don't think your investment, what you invest in should change from year to year. And I go back to the basics. You should decide what you are investing for, and based on your goals, you decide, and your risk profile, availability of resources with you, you decide what you would want to invest in. Equities, debt, gold, real estate. I mean, those are the 4 basic asset classes that most investors would have. And I don't think that should change too much, unless a goal is coming nearby or there is a significant change in the your financial position. Definitely, it ought not to change based on the returns that have been drawn during any particular period, especially for assets like equities, assets like gold, which are very volatile. The prices, if they're going to keep coming up and down, and that's what happens in equity and gold. I think those need to be invested systematically over time. And if at all you're going to take stock, I think in the opening you mentioned about small cap and mid cap investors not doing well. I think if at all you want to compare returns, you must compare your returns vis-a-vis the benchmark index. So, I mean, if your mutual fund scheme hasn't done uh, as well as the benchmark index, then you might have a look at it as to whether you should change. But otherwise, you ought not to have invested in mid cap stocks chasing returns. I mean, within your overall equity, you should decide what portion should be large cap, what portion should be mid cap, what portion should be multi cap. So I think if you have done it that way, then you won't really be worried about the fact that the scheme has returned a negative return over the last 1 or 2 years, as long as I think it is okay compared to the benchmark, and it is the asset allocation is the way that you want it to be.
You know, Mr. Roongta, I actually had another question, especially when it comes to the great performers of last year. But our phone lines have already started ringing. So, I don't want to keep our callers waiting. Let's take our very first call from Mr. Venuswamy. He's calling us from Bengaluru. Good evening, sir. What's your question?
Good evening, madam. Thank you very much for having connected me.
You're most welcome.
Madam, I am just subscribing at present Mire Emergency Blue Chip Growth,
Okay.
1,000 rupees via SIP.
Okay.
Tata Banking and Financial Service Growth, 2,000 rupees. The another one is Tata Pharma Health Services Growth,
Okay.
2,000 rupees.
Okay.
Only the
These three
5,000 rupees per month I am subscribing.
Okay.
Should I just change something, or another question is I just wanted to put per month 10,000 rupees.
You wanted to increase your SIP amount.
In SIP, via SIP, apart from this 5,000.
Okay. And these are the only, you have a long term, you can invest in the long term, sir?
Yes, sir.
Okay.
I am a senior citizen, madam, aged about 80. I am a senior citizen. I just wanted to, one which can be completed within 1 or 2 years.
Okay.
2 years or 3 years I can invest.
All right. Okay, sir. You're a senior citizen. You have these three funds. And, Mr. Roongta, they are thematic funds. I'm sure if you have any counter questions, you can ask our viewer as well right now. But, we just saw Tata Banking Fund was doing great. Sir, Mr. Roongta, do you have any counter questions for Mr. Venuswamy?
Mrs. Swami, what are you going to use these funds for? You mentioned that you will need it in 2-3 years. What are you going to use the proceeds of these funds for?
Sir, only I am reserving this for my wealth. Hello?
Yeah.
It is only for wealth creation as a reserve for my health problems. Because myself and my wife, we are having a lot of problems regarding our health. So we are just wanted to reserve this money only for our health purposes. Using for health purposes. Our regular expenditure, I am getting pension, so that I can manage. But nowadays, the medical expenditure is increasing too much. So as the age grows, it may be going more, which my son or my wife are not able to bear with it. So I wanted to use it only for that purpose, sir. Wealth creation.
Okay. So, Mr. Swami, basically, I think given the purpose, you could need this money at any time. I mean, God willing, you will not need to access the money at all, and you and your spouse will have excellent health. But just in case, you need to have this money available literally at a moment's notice. And I think given that need, I don't think equity funds themselves, let alone thematic funds that you have chosen, I don't think equity funds themselves are a great idea to start with. I think you ought to look at, and depending on your tax situation, how much of a tax you are paying on the pension that you are getting, uh, assuming you are in the 20% bracket, I think you ought to look at something like a liquid fund or an overnight fund rather than equity funds, because this money might be needed and you don't want to be in a situation where at the time when you need the money, the markets are not doing well and therefore your funds are not doing well. So I would suggest that you ought to look at liquid funds rather than equity funds.